Good morning. Let me complete this. Then you can go live on both Facebook and Instagram. Good morning, everyone. Welcome to the London session on 21st of July, of 21st of January, 21st of January 2026. We said this is going to be a daily endeavor from Monday to Friday. This does not mean that we are going to be taking trades every day. No. We are not going to be taking trades every day. We are in the market every day, but we don't take trades every day. So, welcome. We continue off from where we were yesterday, trading GBPUSD. Thank you for joining me once again. We said this is going to be a daily endeavor from Monday to Friday. So let me send this to. This does not mean that we are going to be taking trades every day. No. We are not going to be. So let me send this to my associates on Telegram. Okay, so that is done, and we come back to the business of the day. So I'm hoping everyone has been fine. I'm hoping everyone has been okay. I have been fine. I have been okay. The markets have been very great for January, by the way. So the markets have been very good for a January. Okay, I was not even expecting that. So we hope that the markets will be better as we enter February. Remember, we said volatility injection occurs from February date 10. It is my mentor who told me that, so I cannot tell you why, but when you look at price action, when you backtest it, indeed it is true. In the month of January, especially for currencies, GBPUSD and Euro USD, USD Chef, USD card, there is very low volatility. Okay, so we hang in there. We have 9 more days, and the price action is going to be back to normal. But before then, we have to fight our way out in the month of January. Okay, so normally I look for around 50 pips every week. So this week we have not yet gotten our 50 pips. Last week we got some very good pips. Even in the first week we had some very good pips. So this week we have not yet gotten our 50 pips. Okay, it is not a guarantee that we shall get those 50 pips. The only guarantee we have in these live sessions with Trading Cyborg is that you will not lose your capital. That is the best exciting thing. And the other best, most exciting thing In fact, this one is number one. This one is number one, not number two. This one is number one. The first best exciting thing is that you'll be able to grow your account. We're in January right now. Just imagine by December 25th or December 31st where you'll be as a trader. Imagine if you're able to join these live sessions, even 4 of them per week. Even 4 of them per week, you'll be very, very far as a trader. So these live sessions are not in vain. Okay, they are not in vain. They help you grow and they help me stay in focus during the market hours. So this is a sort of a symbiotic relationship, as opposed to it being a, what is it called? This other relationship where a tick depends on a cow. What is that? What is that relationship? I don't remember its name, but it has a name. So I help you grow psychologically and technically, and you help me stay in focus. Okay? Yes, so welcome once again. We are trading GBPUSD. We also analyze other pairs which you are going to request, and together we grow. Remember, this field is very, very, very lonely. The trading field is lonely. The trading field is filled with scammers, with chatterlans, with nincompoops. Oh yes, it's a parasitic relationship. Yes, thank you. So this field is filled with scammers, thieves, people who are here just to take your money. They don't even want to show you the reality of trading. They cannot even tell you that only 5% make money. Imagine. Only 5%. They only show you the Lamborghinis which they have rented, but they cannot show you how to take serious trades, do analysis, and stay away from the market when need be. So you're in the right place. You are not wasting your time, and it is only 2 hours per day. After that, you can do anything else you wish to do. The reason for 2 hours only is because we are collecting samples. We are like lab technologists. We are collecting samples from GBPUSD. So let me show you. So we are collecting samples from GB. Sorry for that. Sorry. So we are collecting samples on GBPUSD. We are also collecting samples on the London session. We are also collecting samples on what? On one strategy. So we want to know how will we perform in a year trading one pair, trading one market session, or maybe 2, but in the same session, that is the London session, and then one strategy. So we are not hoping from ICT to support and resistance, or market makers model, or what we call Wyckoff schematics. We are using ICT trading. This is a system like any other. It has its strengths and it has its weaknesses, but so are all the strategies. All the strategies have their weaknesses. So no one should let you that any one given strategy will make you money on a daily basis. Okay? The only sure thing, the only 100% thing I can guarantee you is that executing this for one whole year, that is what is going to give us profits. So our profits, we shall check three ways. Not three ways, three times. So quarterly. So we shall check our profits or checking growth. We check growth every 3 months, so every quarter, and then end of year. So you can see we are not taking our results on a day-to-day basis because we are compounding. We are compounding slowly by slowly by slowly. We are also not checking our results monthly because 1 month may not be very good to us in terms of what we wanted, maybe the targets. But I doubt it. If we are serious enough, each month should give us something small. We should be able to grow our accounts legitimately, not illegally. You know, illegally growing your account is you deposit 100, then at the end of the week you want it to be $1,000. It is illegal because it is possible to do that. The illegality comes because it is not sustainable. It is not sustainable for you or your career. And if you want to be in these markets for the next 10, 20, 30 years, you need to follow a structure, however boring the structure seems to be, or however boring the structure is. Okay? So this year is when we are setting the structure. We might end the year as maybe 20 serious traders or even 30 serious traders. Then from that point, we can grow now as the serious traders. Okay? So this is not all in vain, and I hope you'll avail yourself every day for the 2 hours. Okay? So our analysis for today will be very simple. Yesterday we took a sell, but the market got us out of the trade during the news times. So price action came and started retesting this previous week's high. So what you have to know is that each week the market forms a high and the market forms a low. For example, this is Monday. If you can check here down, I don't know if you can see. This is, let me just label it for you. So each week the market forms a high or a low. So this is Monday date date 13. This other day was Tuesday. This one is Wednesday. This is Thursday. This is Thursday. And then we have Friday. So having such a week like that, your work as a trader is to identify what the market intends to form with a high probability that coming week. So you have to anticipate whether the market is going to form a high or a low that week, depending on your analysis. But that does not mean that your analysis will always be 100% correct. the only thing it means simply is that you have done your homework and you're waiting for the market to move in this and this direction. But once the market confronts you with new information, for example, if the market comes and breaks this previous week's high, now that is new information I have been given by the market, and I will be foolish not to heed to that new information. Okay, for example, my bias right now is a sell. It's a sell. But if the market comes and closes above, it closes above with an energetic candle, what we call the marubozu candle. For example, this one is not a marubozu candle. This one here is an example of marubozu candle. This one here, a very strong energetic candle. So if the market forms a marubozu candle and closes above price, above a previous week's high or a previous week's low, then automatically whatever analysis you are done, you have to recalculate your bias again. Okay, so I was talking about previous week's high and the previous week's low. So Monday, Tuesday, Wednesday, Thursday, Friday, so when is the highest probability of forming a high or a low? So Tuesdays are the days which have a very high probability. So if you want to write this down, this is a secret I'm giving you, and the only way to verify what I'm telling you is right is for you to go back to your own charts and do what? And backtest 1 year data. Just 1 year data from 2024 to 2025. You check for the 50 weeks. How many days has the high or the low formed on Tuesdays? For example, last week our high was formed on a Tuesday. It was formed on a London session open. No, the New York session open. So this was our previous week's high. I don't like to denote the weeks, so I like to just denote the bodies like that. But Tuesday formed our high of the week. Okay, and it gave us more confirmations by breaking the previous week's lows. It closed below those previous week's lows. So when a market forms a high or a low as we begin the week, there is a high probability that that market is going to trend downwards. Hello? Hello? So when the market forms a high, we are expecting a sell for that day or for that week. When the market forms a high, no, when the market forms a low, we're expecting a buy. So today's analysis is very simple. Very simple. So the first thing I am noting, or I have to take note of when I'm analyzing today, and you know the good thing about live streaming is that it has forced me to be looking at the all the time frames every day. Normally I just check the 15 minutes, especially when I don't have time, which is not a good thing because sometimes I miss the big picture. But now being live here, it is forcing me now to go step by step of the real market analysis. So yesterday our bias was a sell, but market took us out, and then it came to our previous week's high to retest our previous week's high. It has not yet broken our previous week's high. It just retested and then sold. It sold off. Okay, so there was heavy selling yesterday, after which, and this is GBPUSD, mind you, after which it also broke this order block. So my yesterday's mistake was one which I noted. So yesterday, because I should not have made that, I should not have assumed. It should have been clear. So yesterday I assumed that by price breaking this level just a bit, that it had broken the structure of this, it had broken this order block, but I was very wrong. So the best break of market structure is, for example, like this one here now. So where we can see clearly candles closing below, not just one candle, not just this simple candle here, another energetic candle closing below. So we can see that. Okay, we can see that clearly. Price has closed below this yesterday's yesterday's London low. So this is London low, yesterday's London low. So what you will realize is that lows and highs are quite important aspects. They are quite important tools when reading market structure. And our market structure language is based on how the market is behaving on a daily basis and how it has behaved over the past 20-30 years. So by telling you that highs or lows are formed mostly on Tuesdays, this is data for the past 20 years. Okay, and that is why it is good for you to also backtest it and see whether it aligns with what I'm saying. So this is a secret which I've only told to only 6 people in the live stream. So London low. So this was our London low, and the price came and broke our London low at 10:30. 10:30. That is past New York close. Okay, so our anticipation yesterday was that price would sell immediately, and if not, price would come to this small fair value gap here, and then we could sell, but price never did that. Price came and retested our previous week's high, and today we're in the same now. We are the same level. So my analysis for today is simple. Once today open market price, so let me separate that. So now we are today. We are analyzing for today now. So we are analyzing for today. Then after analyzing for today, we wait. We wait. So our analysis for today, remember my bias is still a sell. Unless, let me tell you, unless we break this level with a serious Marubozu candle, a serious one, a serious Marubozu candle. That's around, that's very far, very, very far. Hey, that is very far. We cannot wait until this level. We cannot wait until that level. That is very far. We shall have missed that trade by no. So the best level will be at this level. So this is the Asian high. So this is the Asian high. So once we want to see whether price is going to take out the Asian high or the Asian low. Remember this market, sometimes I say this market is a mad market because my wish as trading cyborg or my wish as Daniel is that the market immediately starts selling without wasting our time, because we have other things we want to do. We cannot just be staying on the markets the whole day. But the market, sometimes the market wants to play psychological games on you. Okay, so once we take out either of the Asian, we say we are sweeping. So now this is a lingo I'm introducing to you. I've introduced to you previous week's highs, previous week's lows. I'm also introducing to you Asian high and the Asian low. So this is the Asian high and this is the Asian low, and the Asian low also doubles as the market opening price. So this is also the market opening price at this level. So price has not yet taken out either of those levels. So if it breaks this Asian low, we have to do something like that. We close with a Marubozu candle. Even if it is in the 15 minutes, a Marubozu candle must be serious. If it is not a Marubozu candle, it can be two consecutive green candles or black candles. So if it is not a Marubozu, it has to be a two consecutive candles, but it cannot be a week. It cannot be a week. Underline that and note that we cannot break a market structure. And you know, when we break a market structure or when we break a significant order block, what that usually means is that we have a confirmed signal. That is how the signal confirms itself. Right now we don't have any confirmed signal. We are just waiting with our knives and our guns. Once something occurs, now we can draw at the target. Okay? So yesterday we missed our target because we got a false signal. So today the process is still the same. So we wait for price to close below the Asian low, and then we do what? We sell. For those who are conservative, for those who are quite conservative, you can wait for the market to close below. And let me tell you, when you do this consistently, it will be very, very, very hard for you to lose money in the forex markets, in the futures markets, in crypto, in stock trading. The issue is with us traders, because I don't want to single myself out. The issue with us traders is that We don't want to wait. No. We want to get straight to the profits immediately. Okay? But if you have moved from that mindset, because it is always a mindset issue, lack of waiting is usually a mindset issue, and it is the same mindset issue which makes you not be able to compound your profits, because you are not patient enough to compound your profits even for 3 months. I saw some traders saying that they withdraw every week. Why? It is not bad if you have exceeded your targets, but for a sweet compounded return, if you believe in your trading skills, at least 3 months or at least 1 month, so that you can have something nice by the end of the month. But if you're not confident in your skills, you'll bring that in. Your lack of confidence will show up as impatience in the markets. I don't know whether you're understanding me. If you are not confident about your strategy or your market skills, your lack of confidence in the markets will manifest as impatience. So to eliminate impatience, you have to take care of your forex market skills, and that means understanding market structure on a deeper level. So our today's analysis is very simple. We wait for either the Asian low to be taken out for price to close below, or we wait for what? For yesterday's New York's close. Or if you are super conservative, which is now foolishness, but you can still be super conservative, you wait for price to close below this week's open. So the market doing either of those things So there's someone asking a question. Good morning, Mr. Lewis. I hope you are very okay, sir. So Lewis is asking a question on the Facebook stream, and I'll read it. Good morning. After marking out levels that are high probability draw on liquidity, can you show how you come up with an invalidation level where initial bias is no longer viable? That's a very good question, and it's also a very important question to ask yourself every morning when you are inside that trade. What will make me get out of this trade? What is going to make me get out of this trade? So my invalidation levels are as follows. Right now, my bias, I go with the bias in the markets, but it's not a very strong bias. It's not like a very strong belief. Okay? For example, I believe that I should eat every day. So that's a very strong belief. But my beliefs about the markets are not so strong. And this is a lesson I learned the hard way, that my beliefs about the markets should not be so strong such that I ignore the information the market is giving me. So how do I invalidate my trades? Number one, if price closes below this, if price fails to close below this level, then automatically my sell bias becomes invalidated. Okay, and immediately after that, now I start looking for other opportunities in the other direction as I wait for price to come to this significant level. So even if Asian high is taken out, this will not be a strong belief compared to the belief I have about selling the market right now. So the risk I would have used on a sell trade, I'm going to reduce it once this Asian high, and not just reducing it, I'm going to take my profits up to the, my profits are not going to be very ambitious. So first I will reduce my risk. Number two, my profit target will not be very big. So my profits will be like that. The risk will be a half or 0.5, and my take profit will not also be much because I don't know what the market wants to do next, unless now we come and close above this previous week's high. Okay, so those who are on YouTube, you can ask your question. Those who are on Facebook, you can ask your question before the market shows us what it wants. So we have three levels here. We have the Asian low, which also doubles as the market open. We have yesterday's New York's close. Let me delete this one. Then we also have this week's open, market open, which also doubles as this week's previous low, this week's low. Now, where do I want the market to go? The only way to know where why I am having a sell bias is check for something called liquidity. So I have cleared the charts. So this is the 4-hour time frame. So already this Monday we formed our Monday began by buying. So we formed our high of the week. So you can see that I already have a bias. I have a bias for today. My bias for today is that I am selling, and it has been a sale. So the only thing I am waiting for now is a confirmation. And where did we get that sell from? We got that sell from both technical analysis and fundamental analysis. So the first high of the week signifies what? Signifies price has a high probability of selling. So this is our high of the week, and it also doubles as previous week's high. So this is the high of the week, and we also have the previous week's highs. And both of these levels are now equal highs. So I don't know whether what? Oh my god. I don't know whether you are seeing this. I don't know whether you are seeing this, but this is a very good, this is something very nice I'm seeing here now. So what I am seeing here, I have taken my fib on the 4-hour time frame. So I've taken the highest point of my fib in the 4-hour time frame. So the highest point of any price level, that is the highest point, is called a swing high. And this point, this lower point here, is called a swing low. So price has been hovering around our sweet spot level. So we said our sweet spot level is the best place for price to either sell or buy. So this is our sweet spot level in the 4-hour time frame. So remember, this is a 4-hour time frame, not a 1-hour time frame. And we have taken the high of 6th January and the low of 19th January. So you can see we are using serious data here. And the price has done on two occasions. Okay, on one occasion, price came and wicked inside our sweet spot. Our sweet spot also doubles up as high of the week and the previous high of the week. So this level must be a very serious level. So this is level 500 and level. So these are sweet spot level. What? How had I not seen this? I had not seen this, but now it's good I'm seeing this. So this one is our sweet spot level. It's also a previous week's high. It's also a current weeks high. You see, those now are very serious confirmations. So price should be selling at this level. I don't know why I missed that, but I should not have missed it. So we have our sweet spot. We have our previous week's high, and we have our current week's high. So our bias for a sell becomes strong automatically. So we have a strong sell bias, and you can see clearly that price broke the previous week's lows. So the only confirmation we need right now is when we drop to the 15 minutes time frame now. So our only confirmation for this pair is if price now closes below, because if we have a sweet spot here, we have a previous week's high, we have a current week's high, and then we also have a strong high of the week which was formed. So the best thing will be to wait for price to close below so that we can get our opportunity to get in. So I'm not yet in any trade. So if price breaks that level, that's a good entry now. A good entry zone. That's a good entry zone. How many pips are these? So around 13 pips for us to know whether this is a good trade to get in or not. The other level is this level. But for this one, I'm just going to take my profits up to this level. So it is not like it's going to be a very serious trade for me unless price decides to close above that level. Yes, it closes above with a Marubozu candle above. Otherwise, my bias is still a sell on this pair. So we wait and see. We can also check gold. Gold is just rising. And as I told you, gold, majority of the times, gold rises during the Asian session. In fact, that is something I saw somewhere. When does gold mostly go up? During the market sessions. last year. This one is not providing accurate data, but gold mostly rises during the Asian session. I saw somewhere that around 63% of the time last year gold was rising during the Asian session, and it seems to be continuing the same trend this year. Because look at this, look at this, look at this Asian session. Then it comes and starts being when you open the market, it becomes slow. So look at this is also it was also trending during the Asian session here. This one is also trending during the Asian session. So unless you are swinging gold, or unless you had a confirmed good trade like this one, hey, but this is a very good trade. Wow. These are around 3,000 pips. Hey. So we shall keep on timing gold every day until we got a good opportunity like this one. I missed this opportunity because I don't trade gold, but I highlighted it for the person who wanted me to analyze this gold markets. So we shall also keep an eye on the gold market, but we shall do it to get the best trades out of the best trades. So you can also check USD. So USD came and filled our yesterday's fair value gap, the one we had marked. We had marked a fair value gap here. Okay, so it came and filled this level. So the only way I can buy comfortably this pair is if we break that level. That is the only way I'm going to buy USD. Otherwise, I'm just going to be wasting my money for nothing. Like that. So it has to confirm that it has closed above with a serious Marubozu candle. Before that, I cannot do that to myself. So we wait, and when we wait, the market always gives us a clue as to what it wants to do. The problem comes in when we want to force the market to give us a clue. And waiting can even take you 2 days or 3 days. But once you are in that trade, you are very confident. You can even risk 3%, even 4% if you are very confident. There's a guy called Stanley Druckenmiller. So Stanley Druckenmiller is a former hedge fund manager, and one of his secrets, or one of his advice as a trader is, it doesn't matter how right or wrong you are. That is not of importance. The most important thing is how much you make when you are right and how much you make when you are losing. So when you get a good trade, for example, when price comes and confirms with a strong upward candle or a strong Marubozu candle, it breaks this level and then retests. At that point, your confidence should also be up to be able to take that trade with a higher risk than you normally would. Yes. So when you have a very good setup and the market gives you the signal and you are there watching, you should not waste any time. But that is only if you have a serious bias. So we are almost 1 hour into the markets. Not trade yet, but we are hoping the markets are going to be lenient to us. And give us something and give us our daily bread. So GU is what we are waiting right now, GBPUSD. So good morning, Selina. So for GBPUSD, we have said that we are waiting for GBPUSD to close below with an energetic candle and then retest. And when it retests, you will see it will be a very clean retest. That is if the trade is a good trade. We also need to check on the Forex Factory. And also CFTC. So CFTC we checked yesterday, but we can just go over it one more time. So once you Google CFTC, the next thing you Google, you come here, you leave this level, you leave this first table, you come to the second table. Now you come to the third table, this long third table. And on this long third table, we have the Chicago Board of Trade and we have the Chicago Mercantile Exchange. You choose Chicago Mercantile Exchange. Then you come and choose long format. The long format for futures and options combined. Not the long format for futures only. The long format for futures and options combined. You come here to the long format. Okay? Once you come here to the long format, you look for, or you can even search. You can even search using your Google Lens. Oh, no, 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 no. So how do you search? Alright, I don't know how to search using my... Okay, I don't know how to search. So, shall just do it the old way. So the old way is you come pair by pair. For example, here we have Euro FX. You can see Euro FX here. You can also see Euro FX X British Pound. I don't even know what is that. Also, this is Euro JPY, and this is Euro GBP. Okay. So this Euro FX stroke British Pound, this is Euro GBP. So the commitment of traders is how we check whether how hedge funds are moving, not the commercials. Hedge funds, and hedge funds we said are non-commercials. So we have Morgan Stanley Bank, we have JP Morgan, we have Citadel, we have major hedge funds. There are 100 hedge funds in the world today, and they are all using this data. So instead of fighting your, we have in this market we have the non-commercials. So in the forex markets we have three people. We have the non-commercials, who are the hedge funds. We have the commercials, which are the big banks, and then we have the non-reportable positions. These are the small fish, us, the traders, and then we like fighting each other here like small children. So we check the non-commercials. Why? Because the commercials are just trying to hedge their positions. Hey, I'm not seeing the GB, I'm not seeing the pound. For example, you can see on, let us check Bitcoin. Bitcoin commitment of traders, a data from 13th January, only 7 days ago. So when you check the non-commercials, you see that they have 19,000 positions on Bitcoin and 19,000 positions on short. What does that tell you? You should not be trading Bitcoin right now because the big boys are undecided. So if the positions are equal to each other, then you should not be engaging in that market at all. However much you love that market, you should not be engaging. So that means maybe Bitcoin is struggling to break a certain level because price is being held in limbo by the non-commercials. Where is the pound? I cannot see the pound. Alright, we have the British pound here. So the British pound, the non-commercials are 105 contracts in on a short, and they are also 80,000 in a long. So most of the non-commercials are short on the GBP. That is why my bias for a sell is quite strong. So price has not yet closed below. We have a wick here, but that is not a body. We said a body. We said we want a body. We want to see a body. We want the candle close to be a body close. So once we check the CFTC, that is that. That is the only thing we need to know. And this confirmation just gives us confidence. Okay? But entries, exits, that is technical, purely technical analysis. By the way, even these hedge funds use technical analysis. So their entries are in the weekly time frame and the daily time frame. They are not so different from us, just that they have more sophisticated gadgets than us. It is very, very few hedge funds which have insider trading, and when they are caught with insider trading, they have to be punished. So 99% of all hedge funds are just operating like us. They just have a lot of money and they can diversify their portfolios. Some even go to specific businesses, like the old businesses, where they can get some small margins. So they are not only in currencies or on stocks alone. They're in crypto. They are everywhere. They are in oil and gas. But for us, we are focused on the currency markets. And maybe when we make some more profits, we can expand our portfolio to stocks, to even real estate. So for the CFTC, that is that. We shall check it next week. So we check Forex Factory, and for Forex Factory, I like to check news for the whole week. So sorry for that. I want us to tabulate this. I want us to tabulate. Yes, like that. Yes. So the only thing we should have here are red folder news. So how do you filter for red folder news only? When you get into the forexfactory.com, up here there is something that looks like a funnel. This funnel here at the top right corner. Come to this funnel and then you tick expected impact. We have red folder, we have medium. So this medium and these two are not very important, but red folder and this last one is very important, because this one shows us when we are having holidays, so that we cannot take trades during a holiday. Okay, so red folder and these are the folder for holidays. And for the event types, you put in everything, even the speeches, and then you apply that filter. For example, you can see on Monday there was news. That is why I was not in the markets. So today we have news at 4:30 p.m. That is around 10:30 a.m. New York session. So if you're listening to me from the US, at 10:30 a.m. New York time, there's going to be red folder news. We don't care what is happening. We just care whether we are in the market or not, or whether our stop loss is okay or not. So we have news today. and tomorrow also. And also on Friday. So we shall just wait for price to close below, give us a retest, then you can get in. So however good our analysis is, if you don't have the proper entry, either we will get taken out a lot of times, or we will lose a lot of money. So either the market takes out the Asian low, this is the Asian low. Once the market takes out the Asian low or sweeps the Asian low, this is the Asian high. So price is already breaking our level. But there has to be a candle close. I don't know why it is struggling so much. It should not be struggling this much to break that level. What about Euro USD? What's happening on Euro USD? God damn. So Euro USD is similar to GBP USD. So break that level, retest, do the necessary. So this is a sweet spot for gold for so price is about to, this is very interesting. So price is going to a Asian high. The CFTC data is dated 13th January. Is it still valid on 21st January? How often is the data updated? That's a good question. So is it valid on 21st January? Yes, because most of these hedge fund positions are not like intraday positions we take. These are swings. They can swing for 3 months, 3 weeks, because they are the movers of the market. So a 1 week data released by CFTC is still very valid for us, even though it has not been released at the time of the exact market movement, but it is still a good indicator as to where the market is going, for the simple reason of hedge funds put majorly long swings because they are investing a lot of money in those trades. So that is why we use the CFTC data. And how often is the data updated? It is updated every week. Every week on Tuesday. So on Tuesday, we shall see more data. Okay? But the only thing we want to know as retail traders is who is long and who is short. And where are the winners placing their trades. Now we can use that framework to structure our own trades. So this is very interesting. GBPUSD has refused to take out the Asian law completely. I'm suspecting that once it starts trending downwards, people will already be tired of GU because they have lost a lot of money forcing the markets to go down. So for us, we don't do that here. So I'm seeing that the market is going to take out the Asian high. So we shall just wait and see if it is a fake breakout or it is just a retest before we sweep the Asian low. You can see it's a very long, tedious work of analyzing and waiting for the trade. But remember, this is a job just like any other. These are our office hours, mornings, and this is what we have to do to feed ourselves. But remember, it may be only 2 hours, but it involves making a lot of decisions because every day the market is different. It is not like a traditional job where you know A, B, C, D, F until Z, such that it becomes an automatic response. In forex trading, you can start with Z today, or N, or X. It is not a normal day. Every day is a new day. That is why we say, if you lost yesterday, you must not bring the traumas of yesterday into today. So one thing you have to do after every market close is to do something called decompressing. You have to decompress your mind. Whether you have won or you have lost, you have to decompress your mind. You remind yourself that today's trading day is over. And forgive yourself if you have taken a loss which you think you should not have taken. Remember, you are a human being, so you'll make mistakes a lot of times. And if you don't forgive yourself for your trading mistakes, those trading mistakes will keep on compounding subconsciously. That is why you find a lot of people never become consistent. Yes, they have a system, but the traumas are too many. For example, if you lose $50,000 before you finally have an edge, you might already have trauma. So every day, immediately after the market, we have to decompress. Whatever trade we took and did not go away, we have to remind ourselves that we don't identify with any win or any loss. We are here just strictly business. Because most of trading is mental. It's not even technical, it is mental. When you hear me talking like this, I'm trying to remain focused on the business so that I can make the best decisions for me and for you. So GBPUSD has refused to take out an Asian low, and I'm suspecting it is going to take out the Asian high. But I still believe that along the week, it will, I know. However much games it plays, so immediately it closes below this level, will be in for a sale. And now this is the beauty of waiting for a confirmation, that you are not caught up in foolish market scenarios. You are not caught up in a bear trap or a bull trap. We are just waiting. Every day we are waiting. If someone was to join us 1 month from now and they have never joined us, they will think our work is just waiting. We never take any trades. But you have been here. You have seen us taking trades, wins, losses, break-evens. The money part of trading is good, very enjoyable. Making that money, withdrawing it, it is the sweetest thing. But the process is very painful. Those 2 hours are torturous. Okay? But the good thing is that when you expose yourself to the markets for so long, or when you expose yourself to the market with a trader who knows what they are doing, it is easy for you to copy those habits rather than forming new habits on yourself, by yourself, not on yourself. Rather than forming new habits by yourself. And remember, the market is not always going to be like this, that it is slow. There are times when the market will be giving us our take profits immediately and we move on to other businesses or other engagements. Not necessarily businesses, but maybe rather other engagements we have in our lives, like our family. And that is why we should always be trading in the morning, because in the morning is when we are very fresh. For example, right now I'm feeling very fresh, but from 3 p.m., 1 p.m., especially when I eat my favorite food, rice and beef, I have to relax a bit before. So you see, my focus, as the day goes, my focus keeps on decreasing, and you need to be focused. You need to be highly focused. In fact, I don't even take breakfast in the morning, because fasting improves your focus. So my first meal of the day is at 12:30 a.m. That's just by the way, as we wait for the market to do what the market wants to do. You see, it is trying to trap us, but it is better to talk and wait for the market to do what it wants to do rather than guess. So focus is important in the markets, and you should endeavor, you should try, if it is possible, you should try to trade in the morning. Whether you're in the US, if you're in the US, your morning is during the New York session from 9 a.m. 9 a.m. or 3 p.m. Kenyan time. So I'm in Kenya, and in Kenya, New York session begins from 3 p.m. London session begins from 9 a.m. to 11 a.m. and can be extend up to around 11:30, and for the benefit of the doubt, maybe 11:45. But from 12, we cannot take any GBP trades. We have to wait until the New York session. So our pair for today is GBPUSD. Thank you for your patience. Being patient for almost 1.5 hours is not very easy. But I promise you, if it was me, I would have given you your profits immediately. But now it is not up to me, it is up to the market. It is up to the market to give us profits. You don't place sell or buy without a confirmation. So you have to relax first. Just wait. You'll get what you want. Just wait. Why don't you just wait? So here you have a scalp, a small scalp. So I'm thinking the market, because it has taken out these order blocks, that it wants to come to this level, but I don't know. I don't want to guess. So it has tapped into this level. It may come here and take out this Asian high, but this is not a trade I want to take because it's not a very clear trade according to me. How many pips are these? These are 16 pips. The same Stanley Druckenmiller said that if we can learn to keep our hands to ourselves 50% of the time, we would make a lot of money. So So just a minute. Alright, so if we can learn to keep our hands to ourselves 50% of the time, we will make a lot of money. So really, and to me it is not even 50% of the time, it is almost 80% of the time. %80 of the time. So according to the trading cyborg, 80% of the time we should keep our hands to ourselves. For example, right now. So right now, if you're in any trade, now that is on you. So by not being in any trade right now, it has saved us a lot of psychological torture. Because sometimes you can be in a floating loss, and the psychological torture from that floating loss is too much, such that even if you end up in profits, the pain would have been too much to bear. Because however experienced you are, a loss or even a floating loss is still going to cause some type of discomfort. Well, for beginners, the loss is too much, it is very painful. But for an experienced person, it is still uncomfortable. There's a lot of discomfort that comes with losing. For example, if we would have gotten in aggressively with a sale right now, I would be having a lot of psychological discomfort. So even if that trade ends up to be right, like that, and it gives me profits, the psychological torture from this trade would not have been equal to the profits, however good the profits were. So I would rather wait for simple, not even serious, simple confirmations, simple, precise confirmations. And it takes a lot of humility to wait for a trade to mature. Because you have the money, you have the power to press that button. So everything is at your disposal. You have your mind intact. So the act of waiting itself is a show of humility, because you can get in, you can get out. but you'll rather not do something which is going to jeopardize your peace of mind. So we are almost breaking that level. Almost. Let me say almost. You can see that I have switched to the 3 minutes time frame so that I can get the best entry. You can even switch to your 5 minutes time frame if you want. But for precise entries, I like to go to the 3 minutes. So every time frame has its use, and it was put there for a reason. So whoever says that some time frames are better than others, it is because they have not yet learned, or they don't know how to utilize the lower time frames. So we wait for the market close, no, for the Asian low to be swept, and we shall be there. We shall be there. Price is still not yet. Price is still playing games on us, but no problem. We shall wait. Waiting saves you a lot of money, a lot of it, a lot. The reason I say 2 hours is because in a good market, 2 hours is enough for you to make your profits and get out of the market. Only 2 hours. It is only that this market, this January market, has not been very, we are just in the beginning of the year. We're just only 3 weeks into the new year. So if you are joining us right now, you are late, but we are waiting for the market to sweep the Asian low. Now let us look at Euro USD. Even Euro USD is at the same spot. So from 9 a.m., the market has been playing cat and mouse games on us. These are called cat, mouse, cat, mouse. So cat, mouse, cat, mouse, cat, mouse. But remember, we are old cats. We don't play that game. So we have to wait for the mouse to come to us. Then we trap the mouse. Then we eat the mouse. So these are cat and mouse games for the inexperienced cats. But for the serious cats, or for the old cats, you have to wait for the mouse to come to you. You trap the mouse, then you eat the mouse. All of it. So we might not take any trades today, and that is the nature of the live sessions we shall be having. As I said, I will not promise you heaven on earth. I will promise you the reality of trading, and I will also promise you to grow your account in the responsible way. And the only thing I can promise you is, if you are following me seriously, is that you will not lose your trading account. You will not lose your trading account. The problem is people who follow me after one month. Imagine if we had put on a trade right now, we would have lost a lot of money right now. A lot. For nothing. Maybe we are scalpers, but even scalping, you need some sort of confirmation. You cannot just start scalping. By the way, which I misadvise scalpers a lot. I don't like scalping. You see, the only problem with scalping is one. In scalping, you'll make a lot of money. You can even make 20% in a month. Okay, 20% in a month is a lot of money. 20%, a lot of money. Now the problem comes in now with that one trade. And you know, that one trade will always come. So you can have a 90% win rate, but the 10% you lose is catastrophic. Jesus Christ. So the only time I use scalping, and listen to me very well, the only time I use scalping is when I'm in a drawdown and I want to build my confidence back. So what I do is I get into these small trades which will give me these small profits, and then these small profits will compound my confidence and get me out of drawdown so that I can be able to take bigger and better trades. But as a general strategy, I don't like scalping as a strategy because it is tiresome and the risk is too high, and the reward is also high, but it's a very double-edged sword. It's a double-edged sword. A scalper is like a thief. Looking at a thief business-wise, that business of stealing is high risk, high reward. But that one time you are caught, you may be a thief for 39 days, but on the 40th day, all the profits you had made in the last 39 days of stealing, they'll be repaid in that one day. So for example, when you are taken to court, you may be told that your cash bill or bond is $50,000 and you had stolen goods worth $20,000. So you see, a scalper is like a thief. They want to get in and get out very quickly. They are not even patient. So I don't like scalping very much. I would rather stick to intraday trading. And for those whose psychology is very, very strong, I would advise you to even be swing traders. Swing trading is also okay. If you are ambitious enough, like the trading cyborg, you can become a hybrid trader. That is an intraday trader and a swing trader. For example, on GBPUSD, if you are able to get the high of the week alone, then you, my friend, don't need to be in the markets any longer. For example, if I had caught last Tuesday's high of the week, I would have ridden that move from Tuesday up to this level. Those are 100 pips. But remember, I told you I'm only looking for 50 pips a week. To you, they might be very low pips, but those are a lot of pips to me. A lot. So never forget this statement I'm telling you right now. So if we can learn to keep our hands to ourselves 50% of the time, we as traders will make a lot of money. So I'm about to end the live session, but I want you to mark on your chart. I want you to mark the Asian high or the Asian low. The Asian high is the highest point for today. The Asian low is our opening price for today. Mark those two levels. Now, when the price closes above the Asian high, I don't want you to get back in that market. Okay? Because we have confirmations or we have buyers towards sell side. So the only way you can get into this market when you have the Asian, when the market breaks the Asian high, is using a small lot size. And when you use a small lot size, your take profit should be here, should be to this level, this previous week's high. Okay? But if the market breaks the Asian low with a strong Marubozu candle, like this one here, or if not the Marubozu, this one is the Marubozu candle, this one here. But the Marubozu candle does not have wicks. So it is just one continuous, a very long continuous body of candle. If not the Marubozu, we should have 3 continuous candles. 1, 2, 3. I don't remember their names, but they have names. In the candlestick language, the 3 continuous candles, I don't know whether they are evening stars or morning stars, but they have to be 3 consecutive candles. So they break this level, and when they break that level, they come back and retest that level. So what you have done is that you have not forced price to give you anything. It is the mouse which has brought itself to you for you to eat it. Now, the other final question is, if price breaks this level and retests, where is our next take profit? That's a very good and easy question. So, ideally, when we break the market structure, of course, we shall be confident that the market is going down. So our stop loss will not be so huge. So we shall have maybe a 10 pips stop loss and 30 pips take profit. This is 50 pips. This is a lot. I'm not sure the market will come to this point, but you never know. So these are 1 to 5. A 1 to 5, but if you're able to get a 1:4, very okay. If you're able to get 1:3, very okay. If you're able to get 1:2, very okay. In fact, let me surprise you even more. If you're able to get 1:10, like that, just like that, you are very okay. Okay? Yes. But as soon as the market hits the first 10 pips, you have to take some profits off. As soon as the market hits the first 10 pips, take something off, around 30% of the profits. But if you want to let the rest of the trade to continue, you can hold until the New York session or until we get to this level. So take profits are based on many factors. So they can be based on the next liquidity level, like this one here, or they can be based on the time sessions. Like for example, you can say you're going to take your profits when the New York session closes, or as the New York session is beginning. So the first 10 pips in profits, take your profits. Then you can let the trade continue running from that point. Okay? So we have waited for this market for a long time. Thank you for your patience. It is not easy to be stuck in a live stream with a stranger you don't even know. It takes a level of trust, and I cannot take that for granted for the 6 of you who are here. I am here purposely for you, and for me, because this year I also want to take my trading to the next level now. So kudos to you, and keep on working for this skill. This is the future. So keep up. Let's meet tomorrow, same time, same place, and take a win, a loss, or a wait.